Hey guys, what's up? It's AB Trades, and I run a YouTube channel to teach people how to day trade options. So today is day 4 of the 7-day strategy release. So each day I have been releasing a new strategy, and there's the 7 of them that I use and that I trade off of. So today is day 4, which is the top or bottom 10% play, also known as a 10% play. So if you want to see the past videos, go back on the YouTube channel, and if you want to be notified of future videos, please subscribe and turn on those alerts. Also, please like and comment so I know that y'all are liking the content, and comment so I know what exactly y'all want to see more of. So let's get into the 10% plays. The 10% plays I first learned from S&B Capital, which is a proprietary trading firm in New York. So they are basically the best in the biz when it comes to this stuff. So knowing that they did it, I started to implement it into my own trading, and it's been phenomenal. I love this strategy. It's not necessarily a 100% strategy because none is, but I have made other videos on my YouTube channel about it, but now that we're doing this 7-day strategy, I just wanted to include it in it. So basically, I can pull up any stock and show you how this works. So a 10% play means that when you have a trading range for the day, for example, on BA we have a trading range between 310.82 and 318.62. So right here is the trading range for the day, right? This is our trading range for the day. Now, where it closes on the day will determine if it qualifies as a top or bottom 10% play. Why? Well, it's in the name. If the stock closes within the top 10% of the range, so the range, again, when I say top 10%, that's what they said. I don't bring it down to perfect, percentage-wise. Just if it closes near the top of the range, then more than likely it will continue up the next day. If it closes on or near the bottom of the range, it will most likely continue to the downward side the next day. So as we can see here on BA, on this on the trading range of this day, we closed to the upside, and then we had that continuation run to the upside. And I'm going to show you how to trade that multiple different ways. So as you can see, if we want to scroll, let's go on a 15-minute chart. So we have a trading range. You just pick a trading range and it works. Let's look at SPY, for instance. So let's see if we can pick up a few days at once. So let's see if we can find it. So here's one. I would call that close to the bottom range. But I want to find a better example for y'all. So here is an example where the strategy doesn't always work. That's why you're not using this as a swing trade. You're using it to help you in regards to day trading. For instance, see like this, the range is here and here, and it closed near the top, but it didn't break above this resistance, so we had a continuation to the downside. But the next day is a good example, right? Because the trading range for SPY on this day is from here to that's an extraneous thing. I would just say from here to here. So it closed near the bottom portion of the range. And why am I not including this on SPY? Because SPY is an ETF and blah, 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 blah. That was probably a hiccup in the way that the math works. It could be right. I'm sure it's not, because there would have been more of a sell-off. So the range for the day was between here, and it closed near the bottom of the range. So more likely than not, we're going to see a continuation. So what do we look for after we see that it closes within either the top or the bottom percent of the range? Well, we look to see if it's breaking through supports. Oh, look, it's breaking through supports. Your support will usually be based off the previous days, or the day that we're checking the lows of that day. We broke below those lows. So now how do you trade that? Easy. You find the low during pre-market. So let's see, this is Tuesday. How far back are we? 1, 2, 3, 4. Yeah, I can go 5 days. Time frame. Sorry guys, I should have been more prepared. Here we go. So I just want to show y'all a better intraday time frame of what I'm talking about. Okay, so as you can see here, we use the bottom portion of the previous range to determine our support, and during pre-market we broke through that support. Now the real question is, how do we trade that? Easy. So we have an assumption based on the previous day that it qualifies as a 10% play. We also see it break through support during pre-market. That means we are weak as heck in this stock, which means we are expecting it to retrace. However, how do you trade it? Well, you find pre-market support. Pre-market support is right here at 265. Now, what do you expect when you have a massive sell-off? Always expect a quick push up. Why? Because there are a bunch of short sellers shorting the market, and then when the market opens, they quickly sell. And in order to get out of a short sell position, you have to buy. That's negligent. You can forget about that because it's not really in the top 10% strategy or the bottom 10% strategy. So you see, we have the support. Once it breaks through the support, we trade, right? We enter here, and this is our risk. So if it comes back up through here, we close it, and that's where our risk is at. So we know our risk is minimum, but our reward is this far. Again, if you just hold it through this or through this, that's a quick, easy 5-10%. That's all you need to make every single day. If you trade these setups every single day, make 10 to 5%, you can grow your account by 2,000% in a in a year. I don't know. It's just like, it's crazy, right? So that's how you would trade that, for instance. That is an example of a bottom 10% play. Let's see what else we can find though. So for instance, I would qualify. So Apple, we can see it twice right here. So let's see this one. So for instance, the trading range for this day was in between here, and obviously closed on the bottom portion of the range. So we draw out support, which is right here. It breaks through support during pre-market, and then we chart out our our support during pre-market, and we can see here that our support during pre-market is right here. So we go in, we have a sell-off, we enter here again. You could have entered here seeing weakness in the stock because there's so many things to explain, but it's not meant for this video. But like I said, when short sellers sell off, they're going to sell off. It's going to get weak into a previous reason or the previous support that it just broke through, and then you enter here for your best risk to reward. But that's another explaining, probably for another video I'll do. But then again, if you just want to follow this rule, you would enter here, and you could hold it straight through this. This is probably 5-10%, and then if you hold through this triangle pattern, which is what we mentioned yesterday, you would have probably ended up with at least 30%. So that's how it would have worked on Apple on that day, and then on today or the previous trading day, our range is here to here. I would say this closed within the top portion of the range, and then as we can see here, this is going in reverse because the past two examples we looked at is when it fell below. So we're going to try. So before we marked the lowest low of the day to see if it would break through that support to determine how weak the stock was. Well, this time we're going to do that with the high of that day, and we're going to see if it measures strength. So during pre-market, we break above this resistance line. Therefore, this stock is strong, not weak like the other ones. So we chart out stuff, and then we chart, and then since it's the opposite, we're no longer checking the pre-market lows, we're checking pre-market highs. So pre-market high of right here. So we trade again. This is the same concept as short sellers, but when a stock like gaps up, there's going to be people who was holding overnight, so they're going to sell to cover profits. You get a bit of consolidation, and then you break above. Okay, the real question is, how do you know when the top 10% play is no longer valid? Is if you're going to the downside, right, and it starts to break above the previous lows, if it's going down, or it starts to break below the previous highs, then the 10% rule is no longer valid. But since we held above this support of the previous day's high, then we know we're still in for the top 10%. Want breaks above a pre-market high, which is what it did here. Or we know that we're still in because it didn't cross above here, so we broke below, and then it's all game. So I hope the 10% play makes sense. It is helping you quantify and understand which way the stock will move the next day based off strength during pre-market and using the pre-market levels to trade off of. This is basically a simple support and resistance play, playing with the trend. The trend is always your friend. All right, guys, I hope that made sense on day 4. We're going to go on to day 5, so see y'all tomorrow.